So you want to know the dirty truth about no money down real estate? Today's video I'm going to talk about that. You've probably heard quite a bit that you can get rich with no money down real estate. But there are some important things that you need to understand, and if you're considering doing a deal like this or want to learn about doing deals like this, be sure to watch this video. All right, before we dive in, first and foremost, I want to say, please be sure you subscribe to this channel and turn on your notifications. I'm putting out valuable content every week. And if you are a brand new real estate investor or wanting to level up your real estate investing game, you don't want to miss that content coming out each and every week on the channel. So the first thing is that no money down deals, you need to understand, are really more rare. It may seem on the surface. I don't even know if that's accurate to say the way it seems on the surface. I mean, if you think about getting something for nothing, that seems pretty uncommon, right? But I think there's a lot of talk about it nowadays about, getting in with no money down. It's actually even been talked about for years and years. It's not just something new. And so maybe it gives us sort of this false sense that there's like more opportunity out there than what really is. But the fact of the matter is, statistically, there's not going to be as many people who are willing to sell you their property and you not having to pay anything down. You can structure this in a variety of different ways. You can have I did a deal where I bought an entire portfolio of houses at one time, community bank to finance 50% of it, and I had the seller finance 50%, the other 50%. So I got into a deal with a whole portfolio of houses at no cost. It's a really cool story, and I'm going to have to post a video about it on the channel because I haven't done that yet. Very cool story, and it was awesome, and I was like, yeah, this is cool. I need to talk about this. It'd be a good video to put on in the future. But basically, though, it's just more rare, and you also have to understand that it's really not free. When you do a deal with no money down, there are going to be closing costs, holding costs, things of that nature. And yes, you could argue, for all of my friends out there that do a lot of creative financing, like, well, Randy, that's not true. Like, you could get a private money lender to come in and cover that stuff. And that is, you're absolutely right. You could do that. But for my audience, for the folks that are just getting started investing in real estate or looking to kind of level up their real estate investment business, oftentimes you need to understand that there are a lot of other costs involved other than just buying the property. The price you pay for the property, or getting into a property with no money down. So it's theoretically, when you think about it, it's not necessarily like completely free. You're gonna pay for it in other ways. So what do I mean by that? So let's take, for example, if you buy a property and you get that property on seller financing. So you negotiate it and you come to an understanding and an agreement with the seller, like, hey, you don't have any debt on the property. I'm going to pay you, a little tiny bit of money down, or let's keep it no money down at all. So I'm not going to give you any money down, but I'm going to pay you each month for this property. Most people, if they were willing to do that, they're going to usually charge you a higher interest rate. There's usually going to be like a balloon payment on there, that sort of thing. Not always, but usually. Versus if you put a large enough amount of money down, they'd feel more comfortable. Maybe they give you a better interest rate. Maybe they would do a 20-year term or 30-year term. Also, too, there are typically going to be, lenders are going to be scrutinize this more. I talked about the deal where I bought the portfolio. I was very, very transparent. I have a great relationship with a lot of lenders. And I'm like, this is exactly what I'm going to do. Like, I'm going to buy this property. The seller's putting down 50%. I'm getting you to finance 50% in the first lien position. Are you comfortable with that? And because of the relationship, they were, but oftentimes a lender is not going to be comfortable doing that. They're going to be more scrutiny because they're like, wait a minute, you don't have any skin in the game. So, it's easy for you to just walk away if this doesn't work out. And it oftentimes is going to involve you giving up equity or control. So let's say you go the private money route and it's going to be long-term debt and you're going to bring in a partner and they're going to fund the deal. Usually they're going to take a big chunk of the equity for doing that. So you're going to kind of pay for it in other ways oftentimes. The other thing is creative financing. There are risk involved. So just because there's no money into the deal, you've got to understand that there's a lot of risk involved. Maybe risk to you, maybe risk to other people, and you need to understand that you need to do the right thing and have integrity at all times. So one of the things is I have 2 properties at the time I'm shooting this video under contract for subject to. And both of these properties under contract at this very moment that I have believe it or not, as I'm shooting this video, are zero down. I'm not paying anything down at all. Now, I've run into some situations with title and unfortunately have been going round and round for about a month and a half now trying to get some of these title issues worked out. Both of the people selling me the properties, they're in financial tight spot right now. And so I'm trying to move as quickly as I possibly can. At the end of the day, it really takes a lot of skill in putting together these creative financing deals, and I'm keeping them up to speed on what's going on in the process, but it's tough when they don't understand. So if you don't understand what you're doing and how to do it, you can set the wrong expectations for people. I've let them know, hey, you've got some title problems and we're going to work through this, but it could take some time. And so we're working through that and trying to get it resolved. One of them has a shot, one of them is going to be a long shot. And of course, the long shot is is the better of the two deals. So you've got to understand there is real skill involved when you're structuring deals. So you really need to get educated. I talk about creative financing on this channel. I also have a private community that I would encourage you to check it out. I'll put the link in the description below where we talk about creative financing, different types of creative financing like subject to. We talk about structuring seller finance deals, carrybacks, all those things. So if you haven't yet, be sure to check that out. I put the link in the description below. It's a lot of value in there, and you get mentorship and you can have some deals that you run into. We can analyze those for you to help you out. So you need to learn the skill set. You need to be educated. You need to understand that, if you have the wrong contract in place, the terminology can really cause problems with the deal. I would say creative financing, honestly, is not necessarily the best thing for someone just starting out if they're not willing to put in the work on the front end to get really educated. You don't want to mess somebody up by offering creative financing and really not knowing what you're doing. So be sure you plug in on the education and be sure you plug into a community as well. Another issue that you need to be aware of is a lot of times these no money down deals, they are very, very competitive, but also they attract scams. So you can go on Facebook and look, like, for example, in Marketplace, and you can find these deals where there's no money down. Now, get into this deal with no money down. I'm not saying that all things on there are scams, but a lot of times, maybe the person doesn't even have the ability to sell the property. Maybe there's some massive title problems that they know about that they're not disclosing. Maybe they're literally they're using someone else's listing and they're trying to scam you by, saying no money down, and they're going to have you pay some sort of fee or something like that. You just have to be careful because there's so many people looking for no money down deals that it's very, very competitive. And scammers oftentimes will prey on desperate people or uninformed buyers. So I would say from the buyer side, if it's a no money down and it's advertised on Facebook or something like that, you just need to kind of be aware that there are bad people out there that are trying to scam others. Oftentimes, if it sounds too good to be true, oftentimes it is too good to be true, y'all. That's just the reality of it. That goes with anything. So be aware and again, be educated and do your due diligence on a deal, even if it's a no money down kind of deal. The next little dirty truth about no money down deals is that really your reputation becomes your currency. So in the beginning, when you're trying to structure a no money down deal, but you don't have a track record, it is harder typically to do that because you don't have the track record to show this person, hey, I'm going to pay you this money like I say, that I'm going to do, because you don't necessarily have a track record. So over time, your reputation ends up really becoming like your currency. The more deals that you do with creative financing or no money down, the more of a track record you start to build. And now maybe you have this landlord wanting to sell their property, and you can obviously position yourself as, hey, I can buy this for cash at a lower amount, or I can pay you a higher amount closer to retail if you can structure it this way. And oh, by the way, look at all these deals I've done before and I pay on time and do what I'm supposed to do. That's an example of how your previous performance, your reputation can really help you to get more and more of these deals. The other thing is over repetitions, doing this over and over, getting the reps in, you become more comfortable talking to people and negotiating the terms of these types of deals. Whenever you're talking no money down, okay, great, no money down, but then there are a ton of different terms on the back end. How long is the loan going to be? What's the term of the loan? What's the interest rate? Is there a balloon period? Is it not? What happens if you default? All of this stuff you really have to get comfortable talking about with someone, because if you don't seem like you're comfortable or know what you're doing, chances are they're going to sense that pretty quickly and be very apprehensive working with you, especially especially if you don't have a track record. Finally, the last little dirty secret about it is it can absolutely work, but it's not really passive. So again, there are any type of prospecting you're doing, you're going to have to put in effort in as an active thing. But with creative deals, particularly when you're looking at no money down deals, you're going to have to do a lot of prospecting oftentimes to find that deal you're going to be able to get for no money down. It's just, and people maybe can want to argue with me on this, but you're going to have a lot greater chance of finding a deal where you actually put money down or you get a lender and that sort of thing than you are with a deal where you don't have to put anything down. So because of that, it takes oftentimes much more hustle to do that. Now again, there are ways that you can market to people that gives you a higher probability of getting a deal. I mentioned before in this, if you get a list of people who are wanting to sell their property, maybe they have it listed with a real estate agent even, okay, and they're upside down or they have pretty much no equity, like they bought the property like last year or something, and there's very little equity. By the time they pay realtor fees and all of that, they're not going to make any money. And so that's a situation where sometimes you can step in and buy that property like subject to, for an example, and you can help them get out of that deal. Now, oftentimes, then the real estate agent, you got to work on whether you pay them or they try to pay them or whatever. But let's say that there's a deal and there's very little equity. You go in, you take over the payment subject to. Maybe there's enough equity in there where they can pay their realtor and get out of the deal, and not have to come out of pocket, but they don't make any money. Like that is someone who is going to be much more motivated to do a no money down deal than someone that's maybe got a little equity in the property and they're just wanting to sell it and be done with it. So it takes a lot of hustle to find these deals, particularly if you're doing a lot of the traditional type of marketing, to different types of owners that are, non-owner occupied or vacant list, that sort of things. You're typically going to have to look at a certain demographic like carved out of that to have more consistency of finding people that would be a good fit. Could market to free and clear properties, and you could offer people a higher price point than what a lot of other investors offer. And you could even actually, in certain situations, and I got to be careful because I don't want to give people bad advice here, but particularly new investors, but you could actually overpay for a property. You could actually go in there, a property's worth $100,000, and you could actually pay someone $120,000, and it's a good deal. How would that be a good deal? Well, you get into the property for no money down and you pay them $200 a month for a bazillion months. Like, okay, would you do that deal? Like, I would. Like, okay, there's no balloon. I'm going to pay you like a fraction of the rent, and it's a 30-year term. Well, that makes sense. So you could actually do that deal, and even though you're paying higher than what the property's worth, over 30 years, that property is going to become, or however long it takes you to pay off the debt, maybe it's 40 years. I don't know. Like that property is going to become worth way more than $120,000. So that's a situation where you could buy it, pay more for the property. So, if you do that, go back to what I said earlier, you're going to kind of pay in other ways, but you can structure deals to where there's little equity or even overpay. If you can structure them the right way, they can become deals, but oftentimes people are not going to want to do that. So it takes more effort, more hustle to try to kind of structure those deals that way. But again, I tell people all the time, particularly when I'm negotiating, I talk to people and say, hey, I'm willing to pay you retail or above retail. If you can give me the right terms, I can get you the number that you want. So, and then they say, okay, well, what's your cash offer? Cash offer is $100,000. Well, no way. I want $150,000. Okay. I could do that if we can talk about terms. What do you mean? Well, let me give you some scenarios, and then I'm going to give them some different options of me paying no money down, like the best option of no money down and running it out for a long time, or maybe a little bit of money down and a balloon. I'll start talking about different creative finance options. And a lot of times that's how I end up getting the deal is I have a cash offer and then that doesn't work. So then we start looking at, okay, what are some other options? So, and then sometimes at the end of the day, they'll end up going and taking the cash offer. I'd rather do the cash offer. Okay, cool. We can do that too. So those are the things that you need to know, the dirty little secret about no money down deals. I like no money down deals. I'm a proponent of it. I don't say don't do it. You just need to really understand what you're doing and be educated when you're making those kind of offers. So as always, I appreciate you watching today, and I'll see you in the next video.